I don't suppose they could get us air conditioning here at San Francisco State either, right? I mean, that would be asking too much as well, right? Can't ask for air conditioning, can't get things that we pay for to work. What's the point? Okay, so which one were we on?
59.
Okay, 59. Which of the following costs, if expressed on a per unit basis, would be expected to decrease the level of production increases? Fixed costs, say, were 100,000. And if we produce, what, 1 unit, then our fixed costs per unit, I'll just put fixed costs per unit over here, our fixed cost per unit would be 100,000.
Yeah.
Okay. Now, if we were to turn around and produce what? 2 units, our level of production is increasing, isn't it? So now it'd be 100,000 divided by 2. So my fixed cost per unit will decrease, even though the total fixed cost is staying the same, right? Okay. And then, you know, I'm not going to belabor this too much more. 100,000 divided by 3 means my fixed cost per unit, if I produce 3 units, would be 333.34 cents, whatever. Okay, and so the fixed cost per unit on a per unit basis will decrease as production increases. As production decreases, my fixed cost per unit would go up, right? So fixed costs are variable on a per unit basis. They're fixed in total, aren't they? Okay. Variable cost is the opposite of that. Variable costs are fixed on a per unit basis. It's $3 per unit. It stays $3 per unit, right? Whereas our total variable cost will vary up or down with the level of production. Okay. Okay, good. So which of the following is an example of the cost that is variable with respect to the number of units produced? And again, that's going to be our what? Our direct labor. Where direct labor force is adjusted, direct labor is a what? Variable cost, isn't it? So on a per unit basis, if we're paying $10 per hour, then per hour fixed cost, variable cost, our labor cost would stay the same, right? On a per unit basis. Okay. Now, you know, now that I think about it, we didn't talk about and give the definition. We didn't go through the slides that gave the definition of a sunk cost. Okay. But let's just talk about that. I'm not going to get back up into the slides. Let's just talk about that for a second. Okay. With an example. Let's say you're walking out of San Francisco State here one day, and there's a Hollywood producer that's sitting on the near the parking lot looking for talent, right? And so the Hollywood producer goes, "Wait, that's the face that I've been looking for my action hero." Okay? And so what happens? He said, "That's the face that I've been looking for my action hero," right? And they say, "Come to Hollywood with me. I'm going to give you $1 million for 5 movies. So you're going to get $5 million. Now you think about that, and you have to think about, well, what are the costs? Okay? Now what happens? You wouldn't look at the tuition that you've already paid, because that tuition that you've already paid is gone, isn't it? So you would sit there and you would say, well, okay, I'll do it, because even though I have a semester left before I finish my degree, because who cares about the tuition I already paid, and I'm going to get all this money to be an action hero, right? Okay, so sunk cost is not relevant to the decision, because you've already paid that out. You would be looking at costs going forward. I won't say a more realistic example. Another example, I was at a sushi restaurant, and the guy was trying to put a yakitori type cooking method in his restaurant, right? And I said, "Oh, you've got the yakitori equipment. I don't see anything yakitori on the menu. What's going on?" He says, "Oh, I'm not going to finish it because I put it in, but now they say that I have to have a separate ventilation, that's going to go up. I've already spent $10,000, and they want me to spend another $3,000 for the separate ventilation that I'm going to have in the city, and I'm not going to do it because I'm not paying that extra $3,000 because I've already paid, what did I say, $10,000 or something. So I'm sitting there, you know, finishing my sake, trying to explain to the guy, well, wait a minute, that's a sunk cost, okay? That's not relevant to the decision. And the guy's looking at me like, okay, huh? What? Okay, the $10,000 is a sunk cost, right? What he needed to determine was, would he make more than $3,000 on that, you know, finishing that on that yakitori type thing, and I suspect he would, right? So I'm not sure why he was making that poor business decision to not finish that thing off because of what those future costs that he was going to have to incur. Okay, so a sunk cost is a cost that you have already incurred, and a sunk cost is what? Not relevant to the decision. And it's not relevant to this decision because it cannot be avoided because it has already been incurred, right? So he should ignore the cost of that yakitori, right? I mean the cost of the ventilation for it. Okay, good. The following costs were incurred in April. I think we looked at this already. Prime cost is direct material prime cost. So I got to pick up that $29,000. Is direct labor a prime cost? Okay, and then that's it, right? Those are my two prime costs. So when I add those up, I get $53,000. Okay. Rickway Corporation uses a cost formula for its maintenance costs where X is the machine hours. The August budget is based on 9,000 hours of planned machine time. Maintenance costs expected, therefore, for August is going to be what? And remember, we use our Y equals MX plus B is the way we talked about it, or to put it more in our in the context of what we're actually talking about, total overhead cost equals what? Variable cost times the whatever the driver is, direct labor hours, units, plus what? Plus the fixed cost, right? So you plug in those elements here. My variable cost, they told me, is 40 cents. They told me the number of hours is what? 900. And then the fixed cost here is 4,800?
9,000.
Oh, 9,000. Where was the 4,800 coming from?
That would be fixed cost.
No, 9,000 hours. Well, that's what I said. Its fixed cost is 4,800.
But the hours are 9,000. The units?
Oh, the units are 9,000. Oh, okay. I see. Okay. All right, good. So when I do the math on that, I get a total of what here? 8,400? Okay, good. So what would be the predetermined overhead rate here? Predetermined overhead rate.
You would just divide that by 9,000.
Yeah, I take the 8,400, I divide it by what? 9,000, 8,400, what's the math on that? Divided by 9,000 gives me what? Okay, we're going to put our cell phones away. We're going to stop paying attention to cell phone. If you ask me to add this class, don't come to the class and then play with your cell phone the whole class. So 8,400 divided by 9,000 is what? Huh? 93 cents? Okay, 93 cents. Good. Okay. Now, if it's 93 cents and I turn around and let's say my actual hours are 10,000, then what is my applied overhead? If my actual hours are 10,000, what is my applied overhead? Huh? 9,333, you say? Okay, good. That would be my actual, right? I mean, excuse me, my applied. Now, my applied is different than my actual, and we're going to see that we will simply close that out to at the end of the accounting period, right? We haven't talked about all that yet. That's really going to be the topic of chapter 2-3 that we're going to talk about today. Okay? Okay, good. Guys, use the calculators. Don't do numbers in your head. You're entering into a profession in which there's no sense of humor for wrong numbers. You come up with wrong numbers, people don't laugh. So what is it?
I need to go restroom.
A little bit too much information, but go right ahead. What's the number here? $9,333? Oh, okay, well, it sounded like that number was being corrected. $9,333? Guys, look, in my class, there is interaction back and forth. You don't mumble to yourself. If I say, is that the number then? We're confirmed on that number. I get a strong-voiced, professional answer. Yes, that's the number. Yep, I got it. I got the same number. I got a different number. That's how we run the class, right? I'm not going to sit here and drag participation out of you. I mean, I'll do it, but it won't be pleasant. Okay, so to avoid me having to drag you through this, please participate properly. So did we all get the same number? Yeah, okay. All right, good. Now you come over and you take a look at this next question. And I don't think we did this one. I think we did a different one, didn't we? Or did we do this one? I think we'd done a Did we do this one or did we do a different one? I don't know. Okay, let's go ahead. Let's do this one. Again, even if we did it before. So they tell us we're going to use the high-low method. Okay, so when we use the high-low method, we have to find, and when you're looking for what is high and what is low, you focus on the units of activity. You don't focus on the cost, you focus on the activity. Okay, so the high activity here is what? 520. Okay, good. And we've got cost of 470 with those. Okay, 470. And what's the low?
300.
Huh?
300.
300? Okay, I think we did do this one now. I'm recognizing the numbers. Okay, but I don't know that we did them in the pieces the way they're doing it here, because here they simply asked me what is the variable cost per hour. I think this same question appears further down, and we kind of did the more comprehensive one. Okay, but let's go ahead and do this variable cost. Can we get this? Who wants to set that up?
So it can be 1,470 minus 2,820.
Good, and that's going to be divided by
520 minus.
Good, 520 minus 300. Okay, and when we do that, we should get the answer here, which is what, 750? Okay, good. That's my variable cost per unit, right? Okay, now they continue on, and I think they give us the same information, but now they want to know the fixed cost. So to get the fixed cost, I'm going to take what? The 750? And I can multiply it by any number of the units that I want here, high or low. So what do you want to be, high or you want to be low? You want to be high? Okay, so that's what, 520? So I multiplied that by the 520, and that's going to represent my variable cost, isn't it? And then to get the fixed cost, I'm simply going to subtract that from the total cost, and I have to pick the total cost at what? At the high, right? So total cost at the high we said was 4470. Okay, so 4470 minus the variable cost, which was 750 times the 520 units,
3,900.
gives me 3,900.
Yeah.
Okay, well, something's wrong here.
It should be 5.
Right. 750 times 520.
Oh, 750 times 520
Yeah, and then you subtract
is,
447.
tell me again, it's 3,900, you say?
Yeah.
3,900. 44750 minus 3,900 gives me what?
570.
Should give you 570.
Yeah.
Is that what you're getting? Okay, good. Okay, high-low method. Okay, so now, and this is sort of where the, I think the question we did from the slides. Now, same facts. I don't know why that's following me down. And they want to know, well, what happens if you have 420 hours of maintenance? Well, the equation that we've figured out is 750 times the maintenance hours, and here they're telling me the maintenance hours are 420, plus the fixed cost that we figured out from the previous problem, right? And that gives me a total here of 3720 using the high-low method. Okay. Now on your exams, I give you what? I give you multiple choice questions, 30 multiple choice questions. The way I substitute for a full-blown instead of giving you a full-blown problem, I'll give you a series of multiple choice questions that relate to each other. So it's sort of like a full-blown problem, and that in order to get one step, you have to go to the next, or in order to get to the next step, you have to finish one step. Even though it'll be in the format of a series of multiple choice questions. I might give you 4 or 5 multiple choice questions, all that connect to the same set of facts. Okay? Okay, good. If we use the high-low method, what is the variable cost? And let's look at this one, because one of these, I don't know which one it is. I gave you a few of these to work. One of these, the level of activity was different than the dollar amounts. Okay, for the high-low. So the high is what? And by the way, when you take the exam, not a bad idea to bring a highlighter so that you can highlight the high and the low when you find it. So the high level of activity is 4,700. Okay, good. 4,700. Okay, good. And the electricity cost is 3,100. Okay, so that was consistent, right? And that they matched up. And then the low level of activity is 1,900, and that was also the lowest cost, wasn't it? Okay, so I'm not so interested in this one because it's going to be a repeat of what we just did, so I don't want to keep wasting time to go through that. It's going to be the same things that we just did under the high-low method. Okay, I'm looking for one. I thought I stuck one in here, maybe not, in which there was a difference. This is just like that other questions, guys. Take a look at those if you want to look at those. I don't want to waste time going through those. It's the same thing like we did a couple other times. Okay, well, let's see. No, that's it. Okay, so in these I don't have any where there's a difference between the level of activity and the actual cost, because the cost may not move linearly. And so it's possible that the high and low level of activity will not also generate the high and low level of cost, right? You don't panic, you just use the high and low level of activity, and whatever the costs are associated with that, those are the costs that you use. Remember, we're forcing a line that we're saying is our total cost to the data by using the high-low method. So you use the level of activity, and then you pick whatever cost goes with that high level of activity, even though it may not actually be the high or low cost. Okay? Question? Okay, good. So let's go ahead and not save that. And let's jump ourselves into chapter 2-3 slides. Okay, so hopefully you're able to get those. Okay. All right. So let's go ahead and let's take a look. Even though it says chapter 3 here, it's actually chapter 2 and 3. 2 and 3 together. Okay. All right. So we're taking a look at these slides, chapter 2 and 3 together. And what we're going to talk about is job order costing here. Okay. Now, what happens with job order costing, or when is job order costing used? Job order costing is used if our business is such that each item that we produce is unique. And so we keep track of the cost for each one of those items that we produce. Okay? In chapter 4, we're going to talk about a different method, and we use that method, process costing, when our items are pretty much homogeneous, okay, when every item is pretty much the same, okay? But when we have unique items, we use process costing. You can see some of the examples here. If we're Boeing and we're producing airplanes, the cost associated with what? With one type of passenger jet, a smaller one versus a larger one, is going to be different, right? I was on a jet one time. It was a small little jet. It was something like I think it was I want to say it was a 30-seater or something like that, and flying on one of those as opposed to the big, big passenger jet, it's a whole nother experience. That thing takes off, gets up to 30,000 feet like it's nothing. Okay, it's a cool little airplane. Okay, whereas those big old ones, it takes them a while to get all that weight up there, right? Okay, but Boeing would track the cost differently there. If they're making a military airplane of some sort, then that's going to be very different from the cost associated with a passenger jet, right? So because each item is unique, we'll keep track of our cost per job, per order, right? I don't know what that thing is, so I'm going to skip that one, okay? Movie, okay? What happens? If you're doing a Pixar, Toy Story type movie, the cost associated with that is going to be completely different than, say, romantic comedy or something, right? Okay? So we're going to do what? We're going to track the cost by particular job, okay? Okay, good.
One more question now.
Yeah, for this one, Michael, what I did more is I embedded the questions in the slides. So for several of the chapters, I've just done that rather than wait till we get to the quiz and try to go everything at once. I try to stick them in next to where the slide that we covered that would be able to answer that question. So you see these same questions, though, in the quiz itself, in the Word file of the quiz itself. Just like we just saw for Chapter 1B, some of those questions were repeated, yeah. So, and there's nothing wrong with doing it that way, the way you did it, or you can just print all the slides and have it there as well. Yeah, yeah. So I would say in the future, look to see if the questions are embedded, and then just print the slides so you don't have to print extra paper. Yeah, but the reason I have a separate Word file up there is so that later on you can unhighlight the answers, right? So you can still manipulate that file. Here you can't do anything if I just give it to you like this. And I think it's a good study method to unhighlight the answers and then go through it, maybe printing them at that point with them unhighlighted.
Oh yeah, hiding answers.
Yeah, well, you could do that too. You could hide the answers.
Wow, it was like why or something.
But like for this one, you probably not be able to answer it if you hid the answer.
Oh yeah.
Yeah. So large aircraft producers such as Boeing are going to use what? Job order costing, right? Right off the slide. Okay. A job order production system would be appropriate for a company that produces which of the following? Landscape design for a new hospital, right? If I'm a landscaping company, I'm landscaping some private residence. that's going to be a heck of a lot different than what landscaping for a business like a hospital. Maybe one hospital is different than another hospital, right? Okay, so I'm going to use job order costing. Seedlings for sale in a nursery, seedlings would be what? Job order, not job order, would be process costing, right? And we're not going to sit there and say, how much did this little tree cost? How much did that little tree cost? They all pretty much look the same, don't they? Okay, so we would use process costing. Sack of a yard of fertilizer, okay? We're not going to sit there and track the cost for each bag of fertilizer. That would be ridiculous. Packs of flower seeds, no, okay? Then with small gardening tools, including rakes, shovels, and hoes. We're going to what? There's this show called How's It Made? You ever seen this? It's kind of a cool show where they'll just show you, they'll pick something that you never thought of, and then they'll say, well, this is how it's made. And I saw one time they're showing how they make rakes, and the rakes were, you know, all done exactly the same. First there's a lathe that makes the handle, then there's another piece, and then they paint it, and they all go through the same process. So you probably use what? Process costing for that. Okay? Okay. So now everybody should be Googling YouTube, how's it made, because, you know, that's probably what's going to be in my head when I select a question, right? It's asking, you know, process versus job
My
order.
question about the tools, isn't there a variety of tools? So wouldn't you think that making a variety of tools is all different?
There's a variety of tools, but when they're making a batch of rakes, then every single one is the same. So they would keep cost of that batch of rakes using process costing, right? Then when they, you know, switch around the machinery or whatever and switch it over to making shovels, then, you know, they'll use process costing for the shovels and keep track of it that way. So even though you could have different products, let's talk about you know, cornflakes versus frosted flakes. Okay, if it's cornflakes and you're producing cornflakes, then you're not going to each box of cornflakes, right? So while you're doing cornflakes, you'll have your cost accounting system set up to capture those costs. Then when you flip over to frosted flakes, now you're going to go ahead and you're going to track the cost as you make the frosted flakes. So even though, you know, companies rarely produce a singular product, right? You would still track a cost of homogeneous product by basically lot number or whatever, however they do that. Okay, and we'll get into that in chapter 4. Okay, you know, these kinds of questions, to be honest with you, I always end up getting an argument with the students as to whether it should be process or job order. So the chance that I'm going to put one of these on the exam is probably not very likely, because it does start to get a little bit really gray and just hard to something that's hard to test in questions, you know. So I don't like to test it as much anymore. What's the one I was trying to think of? You ever seen the one when Snoop Dogg is talking about how they're showing him, they would always do Snoop Dogg and say, hey Snoop Dogg, can you figure out what this video is? And they were making sausages. You never saw that one? And Snoop Dogg was like, what is that? And then he's like, oh no, I'm never eating sausage again. Okay, so things like that would be process costing. Okay, all right, let's go ahead, and I think we've talked enough about that. Okay, let's go ahead and let's take a look at our job order costing. Now, direct labor, direct material, we will do what? We will trace it directly to each job. That's the whole definition of these direct costs. They're easily traceable to each job, right? Okay, so we'll track those costs as incurred. With our manufacturing overhead, what we're going to do is we're still going to apply it to each job, but we're going to have to use the predetermined overhead rate to apply it to each job, frequently using whatever the direct labor hours were. So again, we're going to do what? We probably use regression analysis. I don't know, but maybe regression analysis is too fancy for us. You can use the high-low method to predict your cost behavior. You figure out what your total overhead costs are going to be for the period, maybe using the high-low method. Then you will get that total cost, you divide it by the number of units. That will be the predetermined overhead rate. And then every time you incur whatever those direct labor hours are, you will do what? Apply it to each job using that predetermined overhead rate, right? Now we still take it to each job, but we do what? We apply it as opposed to be able to track the cost directly. Okay, so we're going to look at direct materials, direct labor, going to be a piece of cake, and we're going to see, and let me back up a little bit. Part of what we're doing here, guys, even though I know this is cost accounting, we are really seeing how we're gathering costs that will assist us in our external financial reporting, right? So we're literally going to be sitting here and tracking our costs as we incur them to each job. We will track those to work in process. We'll come out of work in process to finished goods, out of finished goods to cost of goods sold, right? Once we finally finish up these items, okay? And so we're going to have to learn or refresh our memory on some definitions, learn some new definitions, and then our big job here is going to be seeing how we will apply these overhead costs to these jobs and deal with the under or overapplied overhead. Okay, that's where we're going with all this. Okay, good. So let's just take a look, and they give us this job cost sheet, and it's got the name of the customer, whatever, the date, yada, yada, yada. Department, okay, and we're going to track our direct materials, direct labor, our manufacturing overhead. What do we call these costs? What do we call direct labor, direct materials, and manufacturing overhead? Huh?
Process cost?
The whole system, well, this is job cost. No. Process costing is chapter 4. Huh? Well, direct labor and direct materials are fine. Manufacturing overhead and direct labor are conversion costs. So no, all three of them, what do we call them? The total of three up, what do you call them? They are product costs, yes. Another name? Good, manufacturing costs, right? These are manufacturing costs. Okay, we're going to keep track of them for each job. Okay? Okay, good. So first, we look at the labor. And the labor is what? The labor, not labor, this is materials first. And now we're trying to do first. Our cost of our materials are $116. So we enter that into the direct materials on our job costing sheet, right? Then we do the labor. We're paying these guys $8 an hour. Is that even minimum wage? No. I don't know where you have to pay people $8 an hour, but okay. Huh? Is there a federal minimum wage?
I think it's
The federal minimum wage? So there must be, this must be Mississippi. Okay, we would want to pay less than the federal minimum wage. I used to go nuts. GAO used to send me to some of these places and we'd look at certain information and it would be insane. And I'd be like, oh, really? Are you kidding me? That's what they're saying. But then we were looking at some of the housing. The federal government has what they call housing assistance that they provide where they will give you low-cost loan to produce your own house. And so, you know, they would be able to get the house for $50,000 or something, okay? So compared to the area price. Really? Okay, not bad, okay? That's the good news. The bad news is then you live in Mississippi. And then they had us go look at that in Florida. So I'm sitting there at one of the houses in Florida that they were looking at. We were looking at, they have like model homes and everything to show, hey, you know, you can get this house, we help you get the assistance, da-da-da. And I'm sitting there and looking around like, oh, these are pretty nice model home here in Florida. Florida's not too bad. And I look in the backyard and here comes an alligator. So I like almost knocked everybody down getting there. There are all the people from Florida. Oh, look at that big guy. He's afraid of an alligator. Yeah, you're damn right. I'm afraid. I guess they're slow, but whatever. I was going to test it. I'm slow too. Okay, so $8 per hour, $11 per hour, $88. We enter our labor into the cost sheet, right? Now we do our manufacturing overhead. Now how are we going to do that? Well, we're going to have to apply this. Even though the book says allocate, I don't like using allocate because allocate takes a fixed number and does what? allocates it to various aspects, okay? That's not what we're doing. We're taking what our predetermined overhead rate tells us is the rate per the driver, and we're applying it to each job is a better word. So even though I may slip and say allocate as well, the better word is apply it to each job, okay? And we're gonna have to apply it because, again, some costs are too difficult to trace, right? Okay? Now when we look at these, we will take our estimated total manufacturing overhead. Keyword here is estimated. Okay, it's not the actual, it's estimated, isn't it? How do we come up with this estimated total manufacturing overhead cost? How do we come up with that for the coming period? Do we look into a crystal ball and say, oh, please, gods of accounting, tell us what the cost will be next year?
Historical data.
Okay, and what do we do with the historical data? Huh? Okay, maybe we have a budget. Budget is based on historical data, so I'm going to go with historical data. What do you want to do with the historical data? Beautiful. That's exactly what I'm looking for. We're going to sit there and maybe use the what? High-low method, maybe use some regression analysis. That'll tell us what the total is going to be. And then we'll come up with the equation. We'll plug in what our estimated total units are going to be. That'll give us our total cost. We divide that by the estimated number of units. That gives us the predetermined overhead rate, right? And then every time a job incurs that much driver, probably direct hours is the common one that we use in an academic environment anyway, we'll multiply that times the predetermined overhead rate, and that's how we'll apply it. Good. Okay? So it's estimated, right? These are all estimates. Okay? So in this particular example, this is just reminding you, it's basically what we just got done looking at, using the high-low method, using regression analysis, whatever. I like to say TC equals what? Variable cost times the units plus the fixed cost, right? Okay? Okay, good. So we might have something like this where we take our total cost plus the equals a fixed cost plus a variable cost times the number of units. They plug everything in, so their total cost is 100. And if they wanted the variable cost per unit, they would do what? Divide that by, not the variable cost per unit, but the predetermined overhead rate. That's a pretty low predetermined overhead rate. 100 divided by 2,000 would be pretty low, whatever that comes out to. Okay? Again, high-low method might be a way that we would do that. I would spend more time with this if we hadn't just reviewed this. We just did this, right? Okay, so the way this lecture is set up is though we hadn't just reviewed all this. So I'm not going to go through it again. Okay, but let's just look at it here on the slides, which is what? Using the high-low method, presumably, or not presumably, possibly. They went ahead and they got their total estimated. That's estimated, right? Divide that by the total estimated, in this case, direct labor hours. So their rate per hour is $4. Every time a job incurs that many hours, they'll apply the overhead cost to that, right? Okay. So in this particular little example, we've got what? The 8 hours. That was the amount of labor hours we had, times the $4 per hour. So we're going to apply $32 in manufacturing overhead to this. Did we accomplish our objective? Did we get the indirect cost applied to the job? Did we get the indirect cost applied to the job? Yeah? Okay. Okay, good. So let's go ahead and let's take a look at a couple questions here. Let's look at this Hibbsman Corporation. Bases its predetermined overhead rate on estimated machine hours. Again, you don't have to use labor hours. Okay, you can use machine hours, you could use direct labor dollars, whatever. Okay, at the beginning of the most, now what you use, by the way, is the cost, the activity that you think best drives your overhead, right? Okay, For example, I was on an assignment in GAO. They asked us. There was only 2 plants in the entire country. Both of them were in Henderson, Nevada, that produced the oxidizer that is used to make solid rocket fuel burn. There was 2 plants in the entire country that made this oxidizer that allows solid rocket fuel to burn. Now, solid rocket fuel is something that is very important, and that's why they got concerned when North Korea came up with solid rocket fuel, because what happens, solid rocket fuel is much lighter than liquid rocket fuel, right? So if you can use a solid fuel for your rockets, the rockets can go further. That's how you end up with intercontinental nuclear weapons, right? So it turns out that you need a certain thing, it's called ammonium perchlorate, to make this stuff burn. I mean, to make this stuff. And this stuff that you make lets that solid rocket fuel burn. It's called ammonium perchlorate. So there was only 2 plants in the entire country that made this ammonium perchlorate. Okay? And nobody worried about it until one of them blew up. They were sloppy in the way that they maintained the place, and once solid rocket fuel starts blowing up, the ammonium perchlorate, the thing that makes the solid rocket fuel burn, it's kind of hard to stop it from burning and blowing up. So it blew up this plant. I mean, the thing blew up. Google it sometime. Henderson, Nevada explosion, rocket fuel plant. The thing blew up for 30 minutes. Okay, it was just nothing left but a hole in the ground. So Congress now everybody goes, okay, how's the one plant doing? Because we need this stuff to produce the fuel for weapon systems and stuff, right? So they asked us to go and see if the other plant was, doing proper housekeeping, because they didn't want that one to blow up. And then our recommendation was, hey, we should probably have more than 2, right? We need to farm this out. Department of Defense, you need to farm this out to more than just 2 companies, okay? Now, I say it's in Henderson, Nevada. Henderson, Nevada is just outside of Las Vegas. And when you walk down the streets of Las Vegas, are you at any loss for electric lights? They got lights shining everywhere, don't they? I mean, you got to close those drapes in your room so you can sleep at night, because they got light shining in your room all night, right? Okay. Or if you stay out all night, that's good. Okay. So what happens? They leave the lights on all night, right? So it turns out that in order to make this ammonium perchlorate, you need huge amounts of electricity. Okay. So Vegas uses up a lot of electricity, and these plants that are just outside of Las Vegas also use up tons of electricity. Is there something that's near Las Vegas that generates electricity? Hoover Dam is right there. In fact, after you lose all your money, you go and you take a tour of Hoover Dam, okay? And so what happens? Hoover Dam is right there. So electricity in Nevada is in the Vegas area is very cheap, right? So that's why those plants were there. Okay. So the main cost of producing ammonium perchlorate is the electric bill. Okay. So what's going to happen for something like that to allocate your overhead to a particular, and in that case it'd be process costing, I think. But to allocate, process costing in that case. Still, even a process costing, you have to allocate it, okay? You would probably use as your driver what? Kilowatt hours of electricity, okay? So it's whatever drives your overhead the most is what you should use, is the moral of that story, okay? All right, so with all that, let's go ahead and look at this one, which has machine hours, okay? So they have determined that it's going to be 10,000 machine hours coming up. The estimated variable manufacturing overhead is 6.82. So in this particular question, I'm not asking you to apply the high-low method. I'm just giving you the elements to our formula. What? Total costs equal the variable cost times the what? In this case, machine hours just abbreviate that MH, plus the fixed cost, right? And the variable cost per machine hour is 682. And the total predicted machine costs, or machine hours I should say, is 10,000. And our fixed costs are 230. So using that, I get what? 682 times 10,000 plus 230,200.
$298,400.
298,400.
Yeah.
And we're going to divide that by what? The 10,000 units. And that gives me a predetermined overhead rate of what? 2984. Okay. Okay, good. All right. Let's take a look at job cost sheet. Has what information about each of the following? Direct labor costs. Did we put direct labor costs? Did we put direct labor costs on the job order costing sheet?
Yeah.
Right? Okay. Name of the customer or whatever. The overhead cost, 8 times the $4. We put that, didn't we? Okay, or not 8 times $4. It was $4 times 8 hours, right? Okay. And then direct materials, we put that. Now, if you're saying, is the name of the customer on there? Maybe you weren't sure. You know, that's not what we're here for, to learn that. But cost incurred by the manufacturing department in selling, marketing department, excuse me, in selling the job, that is what? That is a period cost, isn't it? That is not tracked to the product. That will be expensed as incurred, right? Okay. Okay, good. Let's take a look at this one. Now, this one is similar to the earlier one we looked at, but now, rather than just giving me the total overhead, I'm going to have to pick out what items up here are indirect costs, right? To be able to do this. Okay, so is direct material indirect?
No.
Is direct material indirect?
No.
Is direct labor indirect? No. Is rent on the factory building indirect?
Yes.
Right? Sales salaries. Sales salaries may be indirect, but we expense those as incurred, don't we? So we're not going to track those to the job. How about depreciation? That's a manufacturing cost, isn't it? Okay, so we're going to pick that up. How about indirect labor?
Yes.
Yep. How about production supervisor salary? Yes, the production supervisor salary is considered an overhead cost, right? Production supervisor?
Yeah.
Okay, so the production supervisor is what? We've got 12 different jobs going on. The production supervisor spends some time with this one because he knows that Harry is not the best employee, so he looks at Harry for a while and says, okay, Harry seems to be having a good day. He goes over to Sue. Okay, Sue's having a good time over here. She's okay. Hey, Frank, we told you, don't put all that grease on there. Whatever, okay? So he's jumping around, or she's jumping around from job to job, right? And it starts to become difficult. Now, how much time did they spend? Because that's how much we're going to charge. So for that reason, we probably what? Basically apply their cost, whatever we determine their cost to be, to each job, right? It would probably be based on, and that one, well, it really depends on which, because you look at some of these and you're like, well, look, John, depreciation may be, you know, the floor space, the square footage of the building might be the driver, right? The supervisor's salary and indirect labor is probably going to be direct labor hours is a good. So what should we use? Okay, and it's the one that most drive the cost if we have a single plant-wide overhead rate. We're going to be talking in a later chapter about something called activity-based costing, in which we will have multiple overhead rates, and it will depend on how much of a particular product uses of that particular resource, and we'll apply that rate, those multiple rates, to the jobs accordingly. That's down the road a little bit, okay? So here we'll just say we pick the ones that most drives the cost. Okay, so they tell us that what? It's direct labor hours. Okay, and I'm not going to argue with that. That seems reasonable. So I go ahead, I take the 45,000, I divide that by the 20,000 direct labor hours, and so my what? My predetermined overhead rate is 225. Very similar to what we did a minute ago. Big difference is we had to pick out the indirect costs, right?
So these are, so we'll use indirect.
We always use indirect for the predetermined overhead rate, right? Yeah. You know, the difference between this one, Michael, and the last one is they just told me what the total, and they didn't even call them indirect costs. They call them overhead costs, but overhead costs, indirect costs are synonymous, right? Really? Now it's going to start that. Okay. Okay, good. Now we come over and some definitions. Raw materials are the materials that we use to produce our product. If we're producing wooden tables, wood is our raw materials, right? Okay. Work in process is where we're going to gather costs. It's an account in which we are going to gather costs before we have actually finished the job, right? Once the job is finished, we will transfer it out of work in process to finished goods. And I think by now you know the cost of goods sold is the cost of whatever we spent, whatever we sold, I should say. Okay? Okay, good. So you come over and we start with the raw materials. So when we acquire some raw materials, we're going to debit raw materials, credit cash, credit accounts payable, right? Whatever, right? Then what? Then as we issue our raw materials into production, if it's direct material, we'll take that out of raw materials by crediting the raw material and debiting the work in process, right? If it's indirect materials, I don't know, say glue for the wooden table, we can't take it directly to the work in process because that's too difficult to trace to the job, isn't it? So we will put it in our what? Manufacturing overhead. We'll debit there. The debit is the actual. And then we will do what? We will apply it to the work in process based on whatever the driver is. I think in this question ends up being direct labor hours. Okay? Okay, good. So if you take a look, if you like journal entries, you like journal entries, don't you?
So
Huh?
those are all accounts on the chart of accounts.
Yeah, these are all in our GL system, some way or another. Yeah. You guys like journal entries, right?
You should.
Okay, good. Well, I saw some looks of like. And the only people getting an accounting degree from this school that might be allowed to maybe say that they don't like journal entries are people that are maybe thinking they're going to be tax people, because sometimes tax people are bad with journal entries. Any tax people? I do run into tax people that they've been in practice for a while, and then they take the CPA exam, and all of a sudden journal entries are coming back to haunt them, and they sit there and they're like, well, I can't pass the financial part of the exam, I can't pass the auditing part of the exam because I don't know journal entries. I forgot the way costs flow through the system. So I had a former student who is now getting ready to be a tax partner at one of the big CPA firms, at Crow. I think Crow's going to be at Meet the Firms. In fact, she may be there. Go say hello to her. What's her name? Cindy. Okay, Cindy will be there. It sounds like I made that up. It's not. Cindy sounds like her name was Cindy. Yeah, that really was her name. Anyway, so she calls me up here recently and says, hey, I want to buy you dinner because you helped me so much to pass the CPA exam. So I'm not going to turn down dinner. So I'm like, okay, yeah, I'd love to, right? So we go. And then she said, oh, you helped me so much, you know. And I'm like, okay, look, stop saying that. I mean, you had to do what you had to do to pass the exam. She says, no. Don't you remember you came to my office once a week for like 2 months and stayed there like 2 hours during lunchtime to tutor me through the financial and the auditing part of the exam. And I said, really? I did? No, I don't remember that. She says, yeah. I said, well, did you buy me lunch? He says, well, yeah, I did. Okay. So the moral of that story was, as a tax person that needed extra help, and yet she's good enough at tax that she's a partner now at a big CPA firm. So if you do get into that situation where you're thinking you're going to go into tax, the moral of that story is do what? Get the exam done early before you lose your journal entries, right? You know, tax, I'm not a tax guy, okay? I mean, I can't deal with, take, you know, the greater of 100,000 or 50% of the adjusted gross income. Notice I erased it, okay? And then divide that by 3 and compare it to the last 3 years. And if that number is no more than 10,000 over the previous year number, then add that to the adjusted gross income. Whatever. Really? No, I'm not doing all that. Okay, I want a set of rules that I'm supposed to follow that are the same every time. Okay, but some people like tax. Now, if you're someone that likes tax, okay, then I tell you to go for it, because audit can be analogized. We're going to analogize it to medicine. Audit is what? Is the well patient in which we're looking for disease. Tax is the what? Ill patient in which we're looking for a cure. They're saying, please, I need help. I don't want to pay this tax bill. And we're going to keep looking and researching and finding until we're able to help that sick patient, right? Whereas you go in for a checkup, the doctor says, okay, breathe. Okay. You know, you ever heard the one where you say to the doctor, well, it hurts when I do that. He says, well, don't do that. Okay. So, you know, this maybe not, you can't go as far. Now, I say that, but I have a friend, a colleague that speaks at my Stanford class, and he's works at PricewaterhouseCoopers. He's a partner there, and he helps take companies public. So there are areas, and he works in the insurance area, so there are areas within there where you're not so much just saying breathe, okay, turn over, okay. Okay, so anyway, you like journal entries. So if you like journal entries, you debit raw materials here, you credit the what? Accounts payable. If you pay cash, you can credit cash, and that is our what? Debit for the direct materials here, the work in process. Well, not that one, but this one, right? Becomes a debit to the work in process. The what? The 3,000. Okay, the 3,000 goes to indirect materials, right? When we requisition those materials out. Okay? Okay, good. Then we go ahead and we do our direct labor. And so we're going to do what? We're going to credit our salaries payable, assuming we have a salaries payable account, okay? We're going to debit our work in process for our direct labor. For our indirect, that has to go to what? Manufacturing overhead, right? Just to look at that in the form of journal entry, debit work in process, debit manufacturing overhead, credit the salaries payable, right? Okay, good. Remember, we have what? Our overhead, we said, are the indirect labor, indirect materials, and remember I told you that movie that scared me, The Others? Okay, so others are things like what? Depreciation, rent on the factory building, etc., right? Okay, and so our property taxes, right? Okay, so when we incur those costs, we're going to go ahead and debit the manufacturing overhead, and we'll credit accumulated depreciation, could credit utilities payable, could credit rent payable, whatever, right? Okay, so in this particular example, they had the utilities, they had the depreciation, they had the property taxes, and so they debit the manufacturing overhead, they credit the appropriate accounts, right? So be careful, because we are often stuck when we do a depreciation entry of saying, okay, debit depreciation expense, credit accumulated depreciation. Well, that's true if we're dealing with what? With some sort of retail type entity in which they're not having to allocate their overhead. See, I did it. Apply their overhead to each job. If we're talking about a manufacturer, then what? Then we're going to debit manufacturing overhead and credit the accumulated depreciation, right? Okay? Okay, good. So now we're going to apply the overhead. And we're going to apply the overhead. I think in this example they use direct labor hours, I believe. Okay? So, this, guys, don't get confused. Because they said before that the predetermined overhead rate was $4. Now they're saying, forget all that. The predetermined overhead rate is $3.50. Okay, so don't worry that we already calculated at $4. Now they're just telling us it's $3.50. And they tell us that there were 5,000 machine hours worked on this job. So we take $3.50 times the 5,000 machine hours. We're going to debit the work in process for $17,500 and credit the manufacturing overhead for $17,500. So we've done it. We have done what, huh? Okay, well, they didn't show me the little, oh, they showed me the, hello, John, they showed me the journal entry already. Let's look at it on the, here. So we've done it. We've got our what? We've got our manufacturing overhead out of the manufacturing overhead and into work in process, haven't we? Okay, now, there's going to be a slight difference, and we're going to deal with that difference here in a second. Okay, now, what happens? Our non-manufacturing costs, our selling administrative expenses, are simply what? Expense, right? We don't apply those to the jobs. Okay? Okay, good. So there's the journal entry for that. We expense them. Expense is incurred. Then we're going to have our what? Direct materials, direct labor, our overhead applied is in work in process. When we actually finish those goods, by definition, important definition, by definition, let's look at a couple definitions up here. In fact, right here, this total is called what? The total of these three is called what? Good. Total of these is called manufacturing costs. How we spell manufacturing, okay? And then when we have finished that job and we take it out of work in process, we will credit work in process and debit finished goods. By definition, what we transfer out of work in process and into finished goods, by definition, is called cost of goods manufactured. Okay? In Accounting 100, sometimes students will ask me, why is it called cost of goods manufactured? In classes like that. And I'll say, because it's called cost of goods manufactured. And they'll look at me like, she didn't answer my question. Yes, I did. Look, they came up with this before I was born. I don't know. I had no input at all as to why they decided to call it cost of goods manufactured, right? We're like, John, they had accounting before you were born? Yes, they did. When did accounting start? It's first written, I'm sure there was accounting before the 12th century, but it's first written about around the 12th century, right? What we're used to, double entry, bookkeeping, Pacioli and all that, okay? All right, so some things just are, right? So the total of these are manufacturing costs, direct materials, direct labor, overhead applied, the amount that is sent out of work in process and into finished goods, by definition, is called cost of goods manufactured, okay? So they go ahead, and for the jobs that I guess they finished, they debit finished goods, they credit the work in process, right? Just looking at general journal form. Okay, good. And then when we sell the thing, we debit cost of goods sold, we credit finished goods. Just like you would in a retail entity, right? And there's a journal entry for the sale. You gotta record your sale, right? And then you debit cost of goods sold, you credit the finished goods to the cost. Okay, now prepare these schedules. And I don't care about the schedule, okay? What I want us to focus on is those 3 definitions. We're going to look at a series of questions. We're going to focus on those definitions and how you use those definitions to answer some questions here, okay? So the definitions are what? Manufacturing costs are the total of my raw materials, my direct labor, and my manufacturing overhead applied, right? It's essentially what gets added to work in process, right? Okay. By definition, my cost of goods manufactured is what gets taken out of work in process and gets put into finished goods inventory, right? And then I know that what gets taken out of finished goods inventory goes into cost of goods sold. Hello is cost of goods sold, right? Okay, so just from that you can answer some questions that some people might think are very difficult, and all it is testing your definitions. Okay, so you look at this question. Sometimes I'll give a question like this and students will say, oh, that was a really hard question. I'm like, really? Why? Sharp uses job order costing. Okay, what is the amount of cost of goods manufactured? The amount of cost of goods manufactured is what is going to be transferred out of work in process and into finished goods, right? And so what happened? Finished goods had 251 put into it. And just to make sure we're not losing our minds, work in process had 251 taken out of it. Is that the answer to this question? Meanwhile, I'll get students that will look at this and say, I can't believe that he gave us those. Did you see though? I'll hear people walking out. I couldn't handle that T account question.
So if there's a balance on there, the answer would only be the 251. If there, where it says balance 0.
The definition of
cost of goods manufactured would only be the 251, not whatever balance is on there.
Okay, well, the question I give you on the exam may not have 251 on it, so I'm going to go ahead.
In this case.
Stop. By definition, cost of goods manufactured is what gets taken out of work in process. We take amounts out of work in process by crediting it and put into finished goods. We put amounts into finished goods by debiting it. And presenting it to you that way because I don't want you to fall into the trap that this question is designed to do, which is to mesmerize you with all those other numbers. I don't care about any of the other numbers on this.
Yeah.
Okay? Okay, good. Now, I may ask you a series of questions that might end up dealing with some of the other numbers, but for this question, you have to know your definition, right? You know your definition. Then you're sitting there going, I can't believe Professor Ward asked us that easy question. You know, then you're walking up to the accounting department saying, well, he's making this class too easy. Are you going to do that?
No.
Are you going to go up to the accounting department and say, I'm making the class too easy? He says, I don't know. Because you may want to talk to Michael a little bit later. Because I have had classes in which people go and do that. Not here. That's a San Jose State move. Okay, they go and they tell me, the chair of the county department says, well, you know, you should make the class a little more difficult. Okay, I can do that. Okay, so you don't have to worry about that. Okay, all right, let's take a look at this one. And we've got this Hudet Corporation has provided the following data for the month of July. The balance in the work in process inventory count was 20,000 at the beginning of the month, 10,000 at the end of the month. During the month, the corporation incurred direct material costs of 50,000, direct labor 22,000. The actual manufacturing overhead cost incurred was 58,000. The manufacturing overhead cost applied to work in process was 56,000. The cost of goods manufactured was. Now, cost of goods manufactured by definition is what? Out of work in process and into finished goods. And so what's happening? I have to analyze, and it looks like I have to analyze work in process because that's the only thing they gave me information for, right? Okay, so the way you set up what seems like a hard problem so far is by remembering base. You take your beginning balance, and we're analyzing what account? First of all, you got to, no, I don't like the way I wrote that. You have to figure out what account you're analyzing. We're analyzing what account? Work in process. And you're going to do your beginning balance, your adds for the period, your subtract for the period, which is the answer to this question, isn't it? Isn't the subtract what comes out of work in process, the cost of goods manufactured, gets added to finished goods? By definition, what comes out of work in process is called cost of goods manufactured, isn't it? Is that what they asked me here? Yeah. So I got to figure out what got subtracted from work in process, and then I get the ending inventory. So your beginning inventory plus your adds minus your subtracts will equal your ending inventory, won't it? Okay. Now I look at the question, and they tell me that the work in process had beginning inventory of what? 20,000 was the beginning. Then they tell me that during the year the corporation incurred direct materials of 50 and had direct labor of 22 and had actual manufacturing costs of 58. Manufacturing overhead applied to work in process was 56. Now what do I add to work in process? Applied. Well, I'm going to get applied, but it's my manufacturing costs, right? Is what I add to work in process. And my manufacturing costs are my direct labor, my direct materials, and the applied overhead, right? Okay. So my manufacturing cost, I'm going to do separately over here. Manufacturing costs, I'm just going to call them man costs, are going to be what? The direct materials, which was what? 50,000. The direct labor, which is 22. And again, it's the overhead what? The overhead applied 56. So I add these guys together and I get what? Huh? 128,000? Okay, good. So I know I added 128,000 here, right? That's what gets added to work in process, my manufacturing costs. The key thing here is the definitions. You got to know that manufacturing costs are what? Manufacturing overhead applied, direct labor, direct materials, right? It gets what added to work in process, right? Okay. So what I like to do, guys, with these questions is I like to give myself a little subtotal. So I add these together, I guess that's 148,000. Right? And then they told me that the ending balance in work in process was what? 10,000. Well, how does an account go from 148 to 10? And I always do a little side calculation over here just to make sure I don't do it in my head, because they set these problems up for the common mistakes in the head. They put an answer up there that corresponds to what they think the common mistake is that somebody's going to make, and they'll provide an answer that anticipates that mistake. Okay, so I don't do it in my head. I say, okay, 148,000, what, minus 10,000? Gives me what, 138? So that means that I had a what, total in my work in process before I would have subtracted any out of 148. If I subtract out 138, I end up with the 10,000, don't I? And the amount that goes out of work in process and into finished goods is my cost of goods manufactured here. The answer to this question. If you're confused, you are confused because you have refused to believe that it is simply the definitions. Do you know the definitions? I just sounded like that guy in, you ever see the movie Braveheart? You ever saw Braveheart? And then there's this guy that wants him to confess at the end. He says, "Do you confess? Do you believe?" Okay, that it is simply the definitions. So it is sitting there, and it is what? You had to know what your manufacturing costs are. Direct materials, direct labor, manufacturing overhead applied. You had to know that that gets added to work in process, didn't you? You had to know that what gets subtracted out of work in process and added to cost of goods sold is what's called cost of goods manufactured. And if you knew those, what's that, 2, 3 things? If you knew those couple of things, this question was also easy. And you had to what? Have a method of analyzing it. Now, sometimes I'll see people that'll try to explain this using T accounts. God did not make T accounts to find missing numbers up the line. God made T accounts to show you what the balance is at any point in time, right? So I don't believe that T accounts are an effective means to answer a question like this. You want to be able to work up and down and find the missing element, don't you? Every account in the world has a beginning balance. There are adds for the period, there are subtracts for the period, and there is an ending balance. Sometimes students will say, well, wait a minute, the beginning balance was 0, so there was no beginning balance. No, the beginning balance was 0. 0 is a number. Okay? Okay, good. Now you take a look, and let's get to that under, or that's about as hard as that stuff gets. Okay, those journal entries that I was just showing you, that's about as difficult as it gets, as I'm going to ask you for a missing number somewhere. Okay? Okay, good. This is counting 101. I don't ask them for missing numbers up the line. I'm thrilled that they can figure out the ending balance. Okay? We're going to push you. Remember I said a lot of this material is familiar, but we're going to push your understanding of it and your ability to deal with it a little bit further, right? Okay? Okay, good. Now we deal with the under or over applied. You want to take a break? Break or keep going? Keep going? If we keep going, I think there's a good potential to get out early. Yeah. What time does this class get out?
6:45. We have an hour.
Yeah, okay. Let's go ahead. Let's keep going. Okay? All right. So we take a look at the under over applied. And what happens? If you, it's kind of stupid. If you apply too much overhead, then you're over applied. And if you don't apply enough, you're under applied. Really, John? When did you must have came up all night thinking of that teaching moment, okay? All right. So, but I mean, that's what it is, okay? All right. So let's just look at this, okay? Here we go back to the confusing example, and if they go back to now $4 per direct labor hour. So for a minute they were at $4, and then went to $3.50. Now they're back to $4. Okay. Now they tell us that what? The actual overhead is $6.50, and then they tell us that there were 170,000 direct labor hours, and they tell us that the rate, the predetermined overhead rate, is $4, right? Okay. Now my actuals are going to be what? My actuals are going to be, They didn't show me the T account? Yeah, here they go. I want to show it to you here first, and I'll come back. Go ahead. Okay. Let me write it on that previous. I'll put it on the screen so you can see it. Okay. So I thought they had one that showed it. I want to show it to you in T account. So here's my manufacturing overhead. And on the debit side, I have what? I have actual, good. On the credit side, I have applied. Okay? And so what happens? I had actual, the problem told me here, of $6.50. So that is over here. I have applied, and it's $6.80. The $4 per, because they decided to change the overhead rate on us for some weird reason, times this 170,000. Okay, so that becomes $6.80. So since the applied side is higher, I have obviously done what? over applied, right? Okay, now remember, I said, hey, look, don't worry if you use the high-low method, and as a result, your predetermined overhead rate wasn't doing the best job of predicting what your overhead cost would be for the period as you applied it to each job. Don't worry, we'll fix it with a journal entry at the end of the accounting period. We'll just fix it, okay? And when we fix it, we're going to close this out to 0. We'll close this out to 0 by doing what? By crediting the debit side? By debiting the actual side, okay? So I go ahead and I debit that for 30,000. I sounded like one of my Accounting 100 students for a minute there. So we'll credit the debit side, right? No, you debit the debit side, you credit the credit side, okay? So I'm going to debit the actual side, and when I do, does this equal 0 now? So I've zeroed this out, haven't I? So I have to credit something in order for my debits to equal my credits. And I have two options as to what I will credit. Okay? It's 30,000 over applied. I can either credit it entirely to cost of goods sold, thus reducing my cost of goods sold, because what? I applied too many costs to my cost of goods sold, didn't I? Because I over applied my overhead cost. Or I can use the more precise method in which I will allocate it, and this is an allocation, I will allocate it between cost of goods sold, work in progress, and finished goods. Because I'm saying, hey, some of this over, and it would work the same for under applied, over under applied is sitting in each of those, right? And I'm going to allocate it based on how much of my cost is sitting in each one of those. Okay? Which method do you think is better? Well, this is easier, right? This is more precise, right? So if you were auditing somebody, how would you decide? If they told you they just did this, would you argue with them? Huh? If they told you they just did this, would you be mad? It depends on the number. If this under or over applied amount is 50 billion, and they have $1 million of assets, yeah, okay, that's impossible probably, but I'm none too happy, right? So it depends on the materiality of that number, right? As to whether we're going to try to allocate it or what. That's why you may want to be a little more precise with your predetermined overhead rate so that you don't end up with this big under or over applied, but then you have to start going through all kinds of hassle to sit there and then allocate it to each one of these, because now it's going to be a big number, and some pain in the ass auditor is going to make you do that allocation around the time that you're trying to issue your financial statements and all that, right? Okay? Okay, so if you take a look though, and if we simply apply it to cost of goods sold, we're going to do that credit, that debit that I showed you on the previous slide, which we're going to debit the actual side, which will zero it out, right? And the credit will go to cost of goods sold. If I decide that I'm going to allocate it, again, the debit is the same. I'm still going to debit the actual side of my manufacturing overhead account, and then I will simply look at the balance in each one of the appropriate accounts, work in progress, finished goods, and cost of goods sold, add up the total, and then figure out what percent each one of those represents of the total. And then I will just go ahead, and if I'm trying to figure out, how much of it should go to work in process, since work in process represents 10% of the over applied amount, then my 3,000, 10% of 30,000 is 3,000. That'll be my credit to my work in process. For finished goods, 30% of the 30,000 is over applied. My credit to finished goods will be 9. Cost of goods sold represents 60%. If I had $408,000 balance in my cost of goods sold, I would apply 60%, right? Just figure out what percent each one of these makes of the total, right? And that's what we did here. The debit's the same, right? Whether it goes all to cost of goods sold or whether we allocate it. And you allocate it based on whatever the balances were that were left at the end of the period, each one of them. Question? Okay, let's look at some more quiz questions that are embedded in the slides here. Okay. And Sawyer Manufacturing Corporation used a predetermined overhead rate based on direct labor hours to apply manufacturing overhead to its jobs. Last year, the corporation worked 57,000 actual direct labor hours and incurred 345,000 of actual manufacturing overhead costs. The corporation had estimated that it would work 55,000. Had and estimated is a key phrase here, isn't it? Because that's going to be what you're going to use to calculate your predetermined overhead rate, right? So we had estimated that we would work 55,000 direct labors during the year and incur 330,000. So my first job is to take the 330,000 right here, guys. I'm not going to rewrite it. It's right there. 330,000, divide it by the estimated direct labor hours. That gives me a predetermined overhead rate of $6, right? Okay. Now, a common, I'm going to turn to red on this. A common mistake that students make is they get that $6 and then they want to multiply that, use it to apply by the estimated. No, we pick up what? We apply it using what? The actual hours worked, right? To come up with a predetermined overhead rate, you use the estimated, but when we applied it, it's the actual number of hours we work. Isn't that how we apply it? Okay, so you pick up that 6 times the 57,000. That means that they must have applied here, right? Manufacturing overhead. The debit side is the applied. That says applied, believe it or not. The debit side is the applied. 57,000 times $6. They must have applied how much? 342,000 is what they applied. And the problem tells me that what? The actual overhead was what? 345,000? So am I under or over applied? Yeah, I'm sorry. I put the numbers in the right place. Oh, no, I got it backwards, didn't I? Sorry, I got all excited when I thought I was efficient in the way I wrote this. 57,000 times what? The actual times the 6. Sorry about that. Needs to go to the applied side. Credit side. Because I would apply it and debit it to work in process. So that's going to be what? 342. And then the problem tells me the actual on the debit side is 345. Sorry, guys. I got all excited when I wrote that there, and I thought I could get it to go straight into the T account. 345. Okay, so am I under or over applied? I'm under applied by 3,000, right? And that's going to go where? It's either going to go to cost of goods sold or be allocated, right? So if we're a little bit off, I mean, we don't want to have a sloppy predetermined overhead rate, but it doesn't have to be perfect either, right? Because we'll just adjust it out at the end of the accounting period. Okay? So if your costs behave fairly linearly, then maybe high-low method is okay. If your costs got some funky nonlinear things going in there, then you're probably getting more into what? A regression analysis. Maybe you start getting into this data analytics that they keep talking about nowadays, that kind of thing. Okay, let's do one more. See if I can mess this one up. Okay, Clear Colors Corporation uses a predetermined overhead rate based on direct labor costs. It applies manufacturing overhead. At the beginning of the year, the corporation estimated its total manufacturing overhead would be 350. I'm going to pick that number up because I know I have to use it to come up with my predetermined overhead rate, don't I? Then what? In this scenario, they decide to use direct labor cost as opposed to hours. Is that okay? That's okay. Why would you use dollars instead of hours? Maybe you've got what? You've got some fringe benefits and stuff that you want to include in your direct labor costs. And so you could use dollars so that you're getting in whatever you're paying for their insurance premiums, whatever you're paying them for, other benefits and stuff. So dollars becomes a more true measure of your labor costs, and thus something that you should use to more truly figure out what should be applied to the jobs. Okay, so in this particular case, they go ahead and they come up with the predetermined overhead rates right here, guys, at 175 per what? Not per hour now, but per direct labor dollar, right? So we're 175 per direct labor dollar, and then they tell me that the actual job costs were what? Direct labor job costs were 208. So I take that 175 times $208,000, that's dollars, and that's going to give me the amount that should be, don't make the same mistake, John. It's what? Actual versus applied. That needs to come over here. That's going to be applied, and it's going to be applied 364. I like the T account approach for this because it instantly gives me a visualization of whether it's under or over applied. Okay, they tell me that the actual was what? No, the actual overhead costs were what? 362. So these questions, read them carefully. It's very easy to get lost in the way that they're written and some of the numbers. That's why it's important that you actually know what you're doing, right? So that you don't kind of get lost in the middle of some weirdness. And so that's what? That means that I'm under or over? I'm over applied by what? 2,000. Okay. Job cost sheet for job 593. You're going to pick up the direct materials. You're going to pick up the direct labor. Got to do a little bit of work there for direct labor. 71 labor hours times $15. I guess now we're moving to what? Louisiana. The rates are a little better there, I guess. Okay. Right? So we picked up those two items. Now we've got to figure out what? Now we got to figure out the manufacturing overhead. Applied is what gets applied to each job, right? Or they call it allocated, but it's applied. Okay, and so what happens? I take the predetermined overhead rate, which they tell me, they just give this to me, was 14, times the what? And they use machine hours. So times the 175 machine hours. So that was what would be applied to that job, right? Okay, that's just talking about one job. You're like, well, what if it's under or over applied? That's an accounting adjustment at the end of the period, right? In which I'm going to sit there and allocate. I don't do it a job at a time. I allocate it at the GL level, don't I? If I allocate it, or I put it all to cost of goods sold at the GL level. So I take care of that in one chunk so that I have proper financial reporting. I'm accumulating my costs at a subsidiary level, a job at a time, because that's what I have to do in a job order costing system, because everything is different. There's your favorite person. She's not as cool as she used to be because she needs a different phone. But other than that, she's cool because when we see her, we get to
The outfit's gonna update it.
Oh, is it?
Yeah.
You can tell by my sense of fashion, I'm more on a cell phone. Okay, so actually, okay. All right, guys. I'm the guy that talks to cusses at myself. He cusses at Siri. How do you not know this? I'm sorry, John. I'm doing the best I can. So I had to change Siri to a male voice because I got I felt bad about yelling at the females. So now, come on. All right, guys. I will see you on Thursday, just once a week, right? So next time, I don't think we'll go through the quiz next time. So next time, we're going to definitely look at the weighted average method that is used for our equivalent units for our process costing, and with some luck, we may even look at FIFO. Okay, FIFO is maybe something that you haven't seen before, because a lot of times in 101, we tend to want to skip that because it's a little bit funkier method. But we're going to learn both of them in this class, okay? So be ready, and the slides will be up there for chapter 4 in time for class, okay? All right, in the meantime, keep yourself loose with the material by maybe going through that quiz and highlighting the answers, making sure that you're not waiting till the night before the exam to do that, okay? All right, guys, have a good rest of the day.
Yeah, I was going to tell you, so I spoke to my recruiter, and she said, can you give me 2 dates that you would want somebody to come in, and then she could check with their schedule and see if it works.
Want somebody to come in?
Yeah, for the data analytics thing. For the presentation.
Well, we had a presentation already.
Oh, you did? Okay.
But we could do that again. Okay. Yeah, I'll give you 2 dates.
Okay.
Send me an email.
Yeah, I will. Yeah, and then
we had someone come in
who?
before. Her name's Kaylin.
Okay.
From KPMG. I'd like to get someone more senior.
Okay.
Kaylin was beautiful. She was great.
Yeah.
But I'd like to get someone that's can talk a little bit higher level.
Okay.
But the other thing that I'm looking for is someone to teach a class at Golden Gate.
Okay.
If there's somebody. Yeah, and then I'm also interested in whatever that university program is that they have. How does a university end up being the university?
Yeah, how do they pick it? Yeah.
Because they're doing it down.
That'd be interesting.
It's USC down there, and I'm of the opinion that up here it should either be San Francisco State or Golden Gate.
Yeah, one of those. Yeah, they get a lot of people from both schools.
Right, but what would happen is, what KPMG does is they sponsor students through a data analytics program at the schools.
Yeah.
And there's 2 models that they use. One model, sorry, my ears acted up. One model is KPMG says, here's the program.
Yeah.
We're going to come in, we're going to teach it. Mm-hmm. The other model is where the schools say, no. We'll use your program, but we're going to run it. We're going to teach it.
Yeah, because right now, you're right. They told us all about the fact that they're the ones that basically run the courses.
Right. Yeah, well, it depends on what school.
Yeah.
I'm of the opinion, well, I know, I can tell you right now, if we could get something good like that going at Golden Gate, KPMG can come in and start telling us what's what. Yeah. And we'll just do what they say. Yeah. So that's kind of what I'm looking for, is somebody that can talk at a higher level, and we can set that up, and I'll give you a couple of days. Send me an email, I'll give you a couple of days. But the other question that I'm having is, can we get somebody who can teach a class? And how about that even huge picture of embedding the KPMG program at the university?
Yeah, that'd be huge.
Yeah.
Okay.
Yeah.
Okay, I'll tell her about that.
That's why when I said last time, I said don't be required, because it's kind of a big ask.
Yeah.
So if
I'll throw that in there.
If you feel like, hey, John, look, dude.
No, I'm gonna see her on Tuesday. I meet the
I'm more than happy to meet with whoever.
Yeah.
Buy them lunch and have you like come to.
Okay.
Yeah, and we just sit down and we can talk in a sort of civilized manner.
Okay.
If they want to do that, I'm all in on that.
All right. Sounds
all
good.
right. Thank you. What's your name again? I'm sorry.
Salvador.
Yeah. Thank you, Salvador.
Cool.
Appreciate it.
I just wanted to inform you. So next week, I'm just gonna leave a little bit early because I am part of Alpha.
Okay.
And I'm the secretary.
Okay.
So.
What time is the welcome night?
It's at 6.
Oh, okay. You know what? I'm supposed to be over there too.
Oh, okay.
I'm the co-advisor.
Oh, okay.
So we'll have to get out close to 6.
Okay, good.
So yeah.
Okay.
So we'll walk over there together.
Okay. Thanks.
Okay. Yeah. Appreciate it. Yeah. Hi. Oh yeah, I have to hang on. You took the picture? Yeah, hang on to the picture. Don't delete it. I have to create a grade item in iLearn so that you can have a place to submit it. So I still have to do that. In fact, maybe send me another email to remind me to do that. I just got so many classes and things going on that it's yeah, email me again to remind me, because I've got so many different administrative things going on, so many classes that the administrative things start to build up on me. So the more often you remind me, just keep reminding me, and then I'll do it for sure. Just don't delete the picture. Okay, all right, thank you. Appreciate it. Thanks. Okay, see you.
So for the option, so is it the only way to access for the your click your
No, you can temporary access.
every access?
You don't have to get it.
Is this optional for me?
If you get temporary access, it'll last for 2 weeks.
But for the homework, is it in here for the homework that we get graded on?
No, you get grade for the homework if you're here in class on the day that we cover the slides. So you were here for chapter 2, 3, chapter 1, so you get the homework points for that.
Oh, that's all. I thought we'd do the actual writing homework.
No, and then the quizzes are when we go through the quiz together. So those are like gimme points just by being here.
Gosh.
They're kind of like attendance points, but the university doesn't allow me to call them attendance points. So I call them quiz and homework.
This is confusing. I thought homework we had to actually do the homework. They're like,
No.
So this one we don't even
It's
get all.
confusing because you weren't here when I covered that first day. The first day is when I went through all that. So, but if you want to try it out, click that, and you can still go in and look at the homework for free for 2 weeks. Yeah.
So that means so nothing gets graded here then.
No. Well, the system, the way I set it up, they word you the points, but I don't look at that. I just look at what you're here.
Got it.
Yeah.
So the quiz is in a group, right? Or is something
By
individual?
chapter.
Is it we do as a group? Or everybody's in single.
No, we did it together.
Oh,
We did
that's-
just- that's the quiz.
Oh, so that's what I mean. I thought.
Yeah, and the homework is that I'm doing the slides with you. Yeah. Question?
Thank you.
Okay, guys, see you. All right, see you next week. Bye-bye.
So I upload the picture on Island or
Yeah, I have to create a grading item still.
also you didn't.
I haven't done that yet.
Okay,
So she's gonna send me, the other student's gonna send me an email.
okay.
Yeah, I just haven't done that because I have so many classes that I'm frequently behind in my administrative tasks. So don't worry, I'll take care of it by the end of the semester. So before the end of the semester. So don't delete that picture at all.
Okay, sure.
Yeah.
I just wanna know if I should pull up the picture now or
You can't because there's no
because
grading.
I don't know because
element.
I cannot find any.
There's no grading item yet.
Yeah.
So you can't post it up there yet.
Yeah.
Don't email it to me.
Okay, because you said we have to post the picture.
You have to submit it through Island, yeah.
Yeah.
Yeah. But I haven't set up the grading element yet.
Okay.
Grading item yet.
Just make sure I don't make any mistake. Yeah.
Right, yeah.
Yeah.
Just don't delete right now the only mistake you would make is not having the picture by the time
Yeah.
you create that item. So don't delete the picture.
Okay.
Yeah. Okay.
Does that mean? So so just the midterm. So our individual is just midterm then, or our individual assignment. Midterm only.
Individual assignment, where most of your points are going to come from midterm and final,
Fine.
which is really 3 midterms. That constitutes something like 80-something% of the points of the class.
So that means though on the syllabus the connect is still optional. Okay.
Yes, but take advantage of the free trial period. That temporary, they give you 2 weeks free trial, so you might as well.
Yeah, I want to go try it.
Yeah, but you don't have to buy it.
Fine.
Yeah, I'm not here to sell textbooks for McGraw-Hill. I'm here to teach you the material. I don't need the textbook to teach it to you.
And that's what I was wondering. When I went to the bookstore to look for that book, I didn't know that was read. Because I didn't come the first day. That's why I was confused.
The other book, Teresa kind of has her own book, but it's actually, I think she uses a Pearson book in which she gets different chapters from different textbooks. I don't care for those cost accounting textbooks. Those cost accounting textbooks, they get too full of themselves. They start wanting you to deal with every imaginable funky ass thing there is. And the problem is that no two companies do their cost accounting the same. Because there's no standards. can do anything you want in your cost accounting system. So I figure we're better off if we're understanding big picture, which a managerial accounting book does a better job of that than a cost accounting book. Yeah. Yep.
I still 1 hour to go to resume workshop. 1 hour left for the workshop.
What workshop?
Resume workshop.
Oh, okay.
Yeah, gonna head there now since only has been 9 minutes left.
Yeah.
Yeah.
Okay.
Does that
Enjoy.
mean when midterms come, is there gonna be study guide for midterm? Like when almost.
Huh?
Is there gonna be study guide for midterms?
No, I give you practice midterm. So rather than a study guide, I give you questions that are very, very similar to the actual midterm.
When you taught your Islander, you said students don't get a look at it yet. When I saw it right there.
That's correct.
Well, that's what-
Because if I put it there now, then I start getting people asking me questions about things I haven't taught them yet. Because they think, oh, well, this is on the practice midterm, I should know this. So I don't open it up until I've taught you everything that I expect you should know to answer that. Because some students that are very conscientious will go through that practice midterm and try to figure out everything. Why don't they know this? Why don't they know that? Well, it's because we haven't learned it yet. So I don't like to open it up until we're closer to the date of the midterm. Yeah.
Melissa Mary, so your friendly reminder for tomorrow. Your team will be arriving between 1 and 2:30 depending on the traffic. Thank you.
Hello? Hi. Hi, Laura. Good. How are you? I got your text. I figured I'd just call you back. I don't have good news. I don't have any room in that class because it's 40. The room that I'm in has a capacity of 38, and I've already added 46. And they're going to send me to jail. The fire marshal is going to come and arrest me if I put in more people in that class. Yeah. Well, it's not that it's just one. It's that they probably already saw the 46, and they're probably like, okay, let's not pick on John right now, But then if I add some more, then it's going to be like, what is this guy doing? So I just can't come up on someone's radar like that. I mean, I'm sure I already did, and they usually kind of give me a mea culpa for the first week, but if I keep adding people after that, they're going to be like, what do you do? Okay, stop. So I can't do it. What class? You need one class, so you don't have 4 electives, I'm assuming? Okay. Right, they want you to take 4 electives from here. Yeah. Yeah, that kind of sucks. Yeah. I wish I had an answer for you, a solution for you. The only other thing I can think of that you could do, if you took it at San Jose State, could you transfer it? Hang on a second, all right? 1 second. Let me look at something. it's not gonna be ideal solution, but let's at least look at that just out of curiosity. Because I teach the same exact class at San Jose, and I think when you take them within the state university system, then they have to accept it. So I do have one seat San Jose Wednesday nights, 6 to 8:45. Well, I could add you to that class. You take the class in San Francisco, though. I don't know. Right. I don't know. All that you'd have to talk to the right people about. That's not my area. So you'd have to talk to what's within my power is to give you an ad code for that class. You add that class, and then you're physically in San Francisco when you take that class. I give you the grade of San Jose, the grade transfers to San Francisco, you're done. So, yeah. Yeah. Mm-hmm. Freddie said he cannot add you, or he can add you? Yeah, no, it's the discretion to the professor. Yeah, because especially after a certain point. Yeah, I've got a 305 class I can add you to. Somebody will drop, but Laura, I've got 8 over the limit. I mean, I'm surprised another professor who I think should have minded his own fucking business said, you shouldn't add more than that number right there. I'm like, okay, whatever, the number that shows on the board, on the door, above the door. I'm like, whatever, don't, I'm a grown-ass man. You don't need to talk to me like that, but yeah, so I try to help where I can, but I can't get fired either, If Amy says yes, then I'll do it, absolutely. If they give me a bigger room, I can add people. That would be the solution. If you want to talk to Amy and say, hey, look, John said he would add me to this class. He says he doesn't want to do it because he's going to really start looking over the limit, and he's trying to be respectful of that, even though then she's going to look and see that I'm over the limit, but that's all right, I'll take that. So, can we move him to a bigger room, or can you approve him going? She's not going to approve us going over that number, because then she's not only would she, the buck stops with her. So if I do something wrong, she's the one that takes the heat, right? But if at least she can say, well, John's, a renegade, whatever, he did that. But if it's also, well, John, they asked and I did it and I approved it, then she's culpable. She's really culpable then. So I think the question to ask her, he said he would add me, is there any way, but the room is full, is there any way to make it a bigger room? And then I'll add you, and one time I did that, and there was I think I ended up with 78 students in the class, because they put me in that business 104, and that's a big class, and I taught the class in there, and I think I had close to 80 students in that class. So I don't care the size of the class. My voice carries, as you know, and for governmental accounting, unlike advanced, I can pretty much teach that in my sleep. So it's not a problem. So if they can give us a bigger room, I can give you the ad code, but I can't do it under the current circumstances. Yeah. Yeah. Call the office. If you call I have her cell phone number, but it wouldn't be appropriate for me to give it to you. But you can call the office and send her an email. That's probably the better way. She's on this. Oh, what'd you say? Oh. That's a little, well, you could ask that question too again. But send her another email, said that you spoke to me, I'd add you, but the room is full. And yeah. Oh, I'm not the best guy to ask for that. Yeah, look, find Amy. Google Amy Chu. It'll direct you to SF State, and you'll see her email and her phone number there. You'd be better at that than I am. I don't have that number programmed in my phone or anything. That's exactly how I find it. Yeah. Okay. All right. Good luck. Okay. Yeah. Okay. Good luck. If you need anything else, reach out. Yeah. Okay. Bye-bye. Bye.
And then I'll be most of the day, and then I'll be available again after 3 or 2:30. So give me a ring when you get the message. Okay, talk to you later. Bye.
Bye.